brother. Great having you.
You too.
As always.
Asante sana. Great to be here.
Nice. I think the last time we had this conversation was 2019.
Yeah.
No,
We've had a couple.
We've had a couple now, formally on camera.
Yes.
On camera, it was probably 2019.
Yeah.
But seeing the incredible work that you guys are doing at 4G Capital, the impact, and look, I said, why not have this conversation again after so many years?
Asante.
Yeah. Good. Maybe we want to jump us straight into the conversation. From 2013, I have some stats from around 2013. When you guys launched, it's been, it's some impressive stats in terms of what you're doing. Maybe you can take us through that, the milestones since you guys launched in 2013, from, the SMEs that you've supported, the amount of money that you guys have disbursed, what's the progress looking like?
Yeah, for sure. Well, it's been a wild ride.
Yeah.
And we feel we're only just getting started, to be honest. It takes a long time to build a business. But yeah, the operation began in 2013. We had one little branch in Wangigi, just to the west of Nairobi. I was the first branch manager, just giving out little loans with a Nokia feature phone. And since then, we're now in 211 locations. It's 185 in Kenya, 26 in Uganda. We've got about 1,600 staff altogether, 1,400 in Kenya and another 200 or so in Uganda. We have loaned out over $620 million, of which $210 million was last year alone. So from that small start, the growth is kind of exponential. We have dispersed over 5.5 million loans, and in so doing, helped over 600,000 micro and small Kenyan businesses grow. Because that's what we do. We only lend to small businesses. It's not consumer finance. And so I guess that laser focus on driving grassroots economic growth is really important.
Out of the loans that you guys have dispersed, maybe you could go deeper into what's the profile of your customers.
Yeah.
You've said it's small businesses. Who run this small business?
Yeah.
Is it men? Is it women?
Yeah.
What's their daily life like?
Yeah, this is my favorite subject. So between 70 and 80% of our customers are women. Women, we know, are the backbone of every society, not just every economy, every society. They're the mothers. They are the people who feed, clothe, the backbone of every family and every community, and are extraordinarily talented entrepreneurs. And so they are, mama mbogas, small duka owners, colloquially. They will buy and sell stock rapidly. So, our customers are all sectors that just buy and sell quickly. So Matumba, clothing, fruit and veg, fast-moving consumer goods. They could be stockists, tailor shops. I just visited the most wonderful customer yesterday in Wangigi who buys clothes, turns them into dresses, sells them 2,500% profit margin. I mean, incredible. Ladies who buy potatoes and turn them into potato chips and sell twists of roadside food. 5,000% margin. You buy a bunch of spuds and then you sell each of these twists. They are incredibly effective, very, very resilient. They're up at 4 a.m. They feed and look after their kids, get them ready for school, see all the children immaculately dressed, queuing up for the school bus. Then they go to the wholesaler, they'll buy their stock, then they go to work, they sell, work, close up for the night, go home, look after their families. Male entrepreneurs as well, of course. But they feed and clothe the nation. You see, them in the market stalls everywhere around Kenya. Gikomba Market, Kariokor, all the way out to Western, Garissa, out to the coast. They are everywhere, and we are everywhere, and we are here to help them grow.
Speaking of that particular impact, you've employed 1,600 people, and the thing I mentioned to you, probably more employees than some of the top leading banks. I believe you've dispersed more than even some of the top tier banks.
Maybe.
Does that mean probably you are heading to get a license?
Banking license. Well, we have a digital credit provider's license.
Yeah.
We were one of the earliest licensed fintechs.
Yeah.
And we were one of the earliest voices, if I can say this, advocating for regulation in the digital lending space. And we care a lot about that. It's important. Customer protection is everything, because if you don't protect the customer, then you got problems. So we work with banks. We've had great relationships with tier one banks, I&M Bank, Cooperative Bank, Standard Bank. We bank. So we have great relationships with banks, and we have very good sources of local funding from those brother organizations and sister organizations. I don't know if that's a route that makes sense for us, because banks do what banks do, and we're a specialist fintech lender, and we do what we do. And so a bank is there to be a secure source of safe deposits and the other services that banks provide. They're not necessarily well configured to do what we do. So what I like is when we work together with banks, and then we see our customers as they graduate with financial health and competence, and they can graduate from us to the formal sector and to formal banking services, and they put their money in their bank, and they'll get their business loan from us, and then in time they can look at other things from banks. So we do see ourselves as complementary in the ecosystem, not as a competitor to banks, because they do an important job.
Okay, interesting. Speaking of policy and regulation, as you said, you are one of the first people to get the digital credit provider license. Just curious to know, given what's happened in the country in the last few years around regulation of neobanks and digital credit providers, in your view, what do you think are the sort of the right frameworks that the policymakers need to adopt, to make sure mama mbogas get access to loans, and it's a bit fair to all the industry stakeholders?
Yeah. Great question, important question, and it, we've come so far in such a short period of time. It's very easy to criticize government and regulators. I think actually, if you look in comparison to other places, Kenya's really moved very far in a short space of time, and it's been a privilege to be part of that journey and to be part of the dialogue with the regulators, who we have good relationships with. So it's a balance between protecting the customer, which has to come first, and allowing innovation and allowing disruptive, forward-thinking organizations like 4G Capital to come in and design and develop new products that can meet those needs for business growth, but to do it responsibly and fairly. So there has to be a framework around client protection. That means transparency. That means clear pricing. That means good market conduct. That means egregious or predatory practices really need to be outlawed. Arbitrary listing of people on credit reference bureaus, which destroys young lives for very small loans. That's something we have never touched, and we're glad to see industry bodies like the DFSAC, Digital Financial Services Authority Association of Kenya, really standing against that kind of bad practice. So it's good to see the industry playing its part as well as working with the regulators. At the same time, the market has to be able to function. And we've seen how economies backslide and SME finance backslides when governments start getting involved in price capping and stuff like that. If a lender is not competitive, if it doesn't treat its customers well, even if it's being legal, but it's just, its products aren't that great, the customers go to the better alternative, and the market will function, and that's how it should be. You need that dynamic capitalism. You need that dynamic free enterprise environment to allow innovation to thrive and all the rest of it. But I guess what's really important actually is effective enforcement. So we worked really, really hard to get our digital credit providers license. We provide our monthly reports to the CBK. We attend all the necessary events. And I think, there are now probably getting on for about 200 licensed fintechs in Kenya. There's been a surge. There's about another 600 to 800 non-licensed digital lenders who continue to operate with impunity. It would be good to see the regulator move to enforcement as well as the granting of licenses, because that's how you protect the customer. And there's still vulnerable people out there who are not being treated well. There are still organizations that are being very aggressive in the marketplace. And I think that is something that kind of needs some attention.
Okay, good. When you went through the regulatory, getting the licensing and speaking to regulators, just curious to know, for someone who's looking at that space, or for someone keenly watching that space, what key lessons will you tell them about just navigating the regulatory environment, especially for fintechs now?
I think the first thing is be humble, understand the environment, and understand the concerns, and understand why the regulator is taking the position it is taking, because it's doing its job to protect people. So you can't come in, throwing thunderbolts. The second thing is to communicate and to collaborate and be very, very clear who you are, where you're from, what problem you're trying to solve, how you propose to do it, and the role you want to play in the market. And then just do the work. Do the work. Don't try to cut corners. Don't get clever. Don't start talking to fixers or anything silly. Do the work and do it right. And you have to be patient, because they're busy people and there's an awful lot going on.
Interesting. I think recently I read somewhere that you guys got recognized for it's called the B Corp.
B Corporation.
Yeah,
yes.
B Corp Corporation.
Yeah.
What does that mean, for you and even the entire organization?
Yeah, sure. So it's quite important for everybody to be aware. The B Corp movement, it stands for Benefit Corporation. And it means it is it's the highest global standard for impact and for ethical business practice worldwide. It's a very, very big movement. A lot of big brands have adopted it. Google will give special recognition to B Corps, and we're a Google partner company. We're one of their top 10 clients in Africa. And so B Corp's a big deal.
Okay.
To validate that you are doing the right thing. So we had very strong values and standards, which drove our mission and our purpose. But getting that external validation was very, very good for us. We're the highest scoring fintech in Africa as a B Corp. And it means that we balance planet, profit, purpose. We have the highest impact scores in the industry. That doesn't mean we're not a commercial company. The point for us is that by being ethical, you make more money. You're a better business. And by being profitable, you're able to be confident enough to do the right thing, because poverty robs ambition. And when people struggle, they can panic and do dumb stuff. So that kind of universal truth is very good for us. We actually got the Best African FinTech Award from the Africa Bankers magazine this year, which is an even more exciting bit of commercial recognition to go atop the B Corp score. So we're blessed. We're truly blessed, and it's all because of our customers and our amazing staff and the guys who put in the hard yards every day. It's an amazing privilege to be part of it.
Okay, interesting. Speaking on, I don't know if a lot of people recognize that you are a former soldier, from the battlefield to
to the boardroom.
To the boardroom. And my view is a lot of global players who've never been to the continent, I think, underestimate doing business in Africa. But you have the experience of, coming into this market, setting up, employing thousands. What lessons, would you, from your experience, what unique top sort of lessons, stand out about doing business in Africa, especially that global players or investors could be underestimating?
Well, there's huge misunderstanding about Africa, and and a massive knowledge gap about how important Africa is to our future, because the future is coming up very, very quickly. And the future of humanity is going to be defined by Africa's next epochal development. All the resources are here for the planet. A quarter of the globe's population will be African by 2050. A third of the working adult population will be African by 2050. I'm sorry, both cases. And so Africa matters massively. And the innovation and the opportunity here, the entrepreneurial strength and resilience and energy and innovation as well is incredible. So there are many places which, and of course there's no such thing as Africa, there's 54 countries, north, south, east, west, center, and diaspora. So there's 6 Africas really when you look at, and they're all different. They're all different stuff going on. So first of all, you've got to recognize how exciting the opportunity is, how well you can do by delivering the services and the products that people need, a bit like doing business. You do something valuable, you do something cool, people recognize it, they pay for it, you build a delivery mechanism, you build a culture that sustains that, you're disciplined, you run a tight ship, and you can do the most extraordinary things and scale, and really what excites me is the prospect of taking African solutions and applying them to global problems. Because we've bottled lightning here in East Africa. We have got an extraordinary solution to propel small business growth, and that can really be applied to a global problem, which is a $10 trillion market opportunity for micro and SME lending. So that's where we want to take our story ultimately. We are ambitious. But to answer your question, for people coming into Africa, look at the context. Don't try to bring in a template from wherever you're from. Respect and harness the local talent and innovation, respect and work with local governments and regulators, and just follow the value creation flow. Just follow the flow. Whether you're selling fast-moving consumer goods in maybe smaller bottles or smaller sachets, because people will have a different use profile than they would in Europe or the United States. Or the way you just tell your story, but just the opportunity to create and claim and deliver value by helping other people succeed. And so I guess maybe something more specific, particularly for a tech firm and AI firms, there's a lot of talk about automation. There's a lot of fear about the fourth industrial revolution, about people being replaced. The techies and the AI guys will say that's misplaced. There's always been evolution. I would say specific to Africa, augmentation, giving people the means to accelerate their productivity through technology, AI, through mobile. That is incredible. That is properly incredible, because there is a huge informal economy that is going to transition to the formal economy. And that's where I think the opportunity really lies.
Okay, interesting. On the opportunity side, my current favorite subject, or something that I'm keenly following, is the growth of private credit at the
Right.
Especially I see opportunities in Africa for someone to build products for private credit markets. And from an SME standpoint, I think those are the people who mostly need that type of credit. From your view, as we come to the end of this, what are the biggest opportunities that you are seeing in that SME sector and the private credit market? And how is 4G Capital positioning itself to harness this?
Well, again, it's a fantastic question. It's an important one, and it's an exciting one. We really we want to be part of the connective tissue of the Kenyan economy that helps move capital from A, the private credit market, to B, the micro SME, and then back again with alpha, with great yields, where everybody wins. The customer wins, the investor wins, the payment channel wins, the overall economy wins. I mean, we've been propelling grassroots economic growth. We've been driving the hustler agenda before it became a thing. It's always been a thing, and it's great to see that it's an even bigger thing, and that it's part of the national trajectory, and we really want to play our part. But pretty much all of our debt funding comes from local commercial paper, from private investors and institutional investors, local banks, local pension funds, and we are able to put that money into the local economy and deliver incredible results. Our customers will grow their revenues by an average of 82% year on year. I've got a 91% retention rate for those customers, so they grow and grow with us. So I think that is where we, as a fintech, sit, where 4G Capital sits, is at that intersection of technology, of financial services, and of real-world economic growth. It's not theoretical. Yeah. And so that connection of private capital markets, private debt markets into the local economy, that is what we do. That is what we do. So, we're a proud, African success story. We're a friend of Kenya, friend of Uganda. We are very, very much aligned with that growth agenda, and we're excited about the future. Interesting.
Maybe the last question is just to add on the points you've mentioned. Of all the previous rounds that you put to the market, although privately, they've always been oversubscribed. What's the secret?
I guess just follow the numbers. The numbers speak for themselves. Yeah. The growth speaks for itself. Yeah. We absolutely adore our customers. We're committed to their success. We succeed when they succeed. That turns into a strong brand. We've got an incredibly talented ground team of Kenyans, here in Nairobi and across the country. And I think people just recognize, that it's a great return, it's a great yield, and it's something you can be proud of. Yeah. And you should be proud of it.
Exactly.
So invest.
Good. Thank you so much,
my brother.
Good seeing you, and I appreciate for
Thank you so much. Good. Fantastic conversation.
Good.